Okay, we're recording live.
All right, this is Market Week Live, May 16th, 2025. Information and support for traders and investors. Let's get going. All right, what's coming up in this show is that we're going to bring you our express round. That's the Q&A with the askSlim analytical team. This is for level 1 to 4 members. They're invited to get a special link, and they'll be able to come in and ask us questions for analysis. So if you are watching on YouTube and you're not a level 1 to 4 member, please do subscribe, and you'll be able to participate in this. And right now, our members that are in the room, you can put questions in on analysis or our services, trade planning, trading issues you might be having that we can help you with. And if you have any questions about the stock indexes, don't put those in there because I'm going to be bringing that at the end of the show. Then Matt's going to bring you a special review of our services. And this week, it's a level 4 special. You're going to be able to subscribe to this, see everything that we do, and it's non-recurring. One time you pay, one full month, and you're going to be able to see everything, and you're going to love this opportunity. And I'm going to bring you the stock market analysis, some of the evidence, probabilistic projections in price and time. We'll look at SPX, NDX, Russell, and the VIX, and you're going to see our reversal scout at work. I've prepared a very special chart for you that you're going to say is phenomenal. And then you'll also see our proprietary studies and the market condition monitor. You will love that. Let's allow you to get acquainted. If you are brand new watching this, you're on YouTube, you're not a member, sign up for SIR Lite. Go to our free stuff. That is our Snapshot Lite, and that's at the top of the page into free stuff. And sign up. You're going to get an S&P analysis every single day. Matt does a great job on this, and you'll be able to really get a sense for the work that we do. Lots of stuff in there, charts, everything. On YouTube, subscribe to the channel. That's at askSlim Team. Click the notification bell to get our videos, and do like this video. Give it a thumbs up on X. Follow me at askSlim. Any questions you have, write to Matt at askSlim.com. Everything that you see that we're presenting here, whether it's on this website, whether we bring it to you orally, whether it's video, however we do that, this is for discussions with your investment advisors or investment decision makers. You should always be looking at your own trading plan before you make those decisions. You can get our full legal at askSlim.com. You want to know how to reach us? Well, you can write to team at askSlim.com. That's membership issues, membership questions, website issues. And if you want to be able to get more information on our content, information on education, analysis, first-time specials, or upgrades, write to Matt at askSlim.com. This is our whole analytical team, just an absolutely great team. I've been in this business for 51 years as of May, started as a trader in the CBOE in 1974, and I'm still here doing it and happy about it. Got a great team, Matt, Arvi, and Katie, all been with me for a very long time, and everybody's got their own roles and does a great job at it, and all experts in the analytical style that we bring to you that you can learn. You want to learn more about us? Go to askSlim.com. To the top of the website, about askSlim, meet the team, and see the interviews that we have up there, and you're going to find the information to be great. All right, this is where we start our Q&A for level 1 to 4 members. Again, you're in there. You can still ask questions for the next couple of minutes. We're going to take about the next 10 minutes, and then be able to then move on to the rest of the analysis. So let's start out here. Let's see what we have in here. We got a couple questions for SMH. For me, I see natural gas because I'm going to do the futures. We have natural gas. Somebody wants gold short term. So I'm going to look at gold short term and intermediate term because we look at multiple time frame analysis. And that always means that we're going to be looking at the weekly and the daily. So I'm going to look at natural gas and gold. And then the rest of the team will bring the stuff on the stocks or ETFs. All right,
Slim,
so
we had a member yesterday that had requested ZN.
ZN. So we have slash NG, we have slash GC, and slash ZN, which is the bond market. And those are the three I'm going to look at. Thanks for that, Katie.
Yep.
All right, here we are. Did you guys see my charts? Because I'm not sure that I'm set up correctly.
GC.
Yep.
Got it. Okay, good.
Yep.
All right. So the first question we'll look at, since I have the gold chart open, is gold. Remember, we do multiple time frame analysis, which means that what we're looking for is the dominant cycle and the dominant momentum, and then the shorter term cycle and momentum. We put that analysis together. And if you're a much shorter term trader, like a day trader or a swing trader for a couple days, you might also be putting in the 2-hour charts on that. So not putting that up right now, but here, what I want you to see looking at the weekly chart is that, let me just go a little bit further out in here. You could see the beautiful cyclical harmonics that are in here. Remember, what we're looking at are the rhythms in the market. The bigger cycle brackets on the bottom are the most dominant. And then you have, in this case, a minor third that's in there. And that minor third tracks the silver pretty well, because you have silver in there also. And what this all was calling for was a corrective period in here. Now note that what you have in here is still upside momentum. What that would say is that corrections will be only into these upper levels of support, which says to me that you come down here to 3150, potentially here to about 3035. Those are the downside targets that we have in here during this corrective period. And the correction is coming very timely. Now, if I go over to the daily chart, look at the yellow zones. Those are the areas where you start to look for corrective parts of the cycles. If you take our cycle analysis workshop, you'll learn about the 4 different phases that we look at: the rising phase, the cresting or peaking phase, the declining phase, and the bottoming phase. And here you could see it crested right in here, and we entered into the corrective phase to see where this rolled over. So what you have here is a momentum that is negative on the daily chart against momentum positive on the weekly chart. And that tells you that you're probably not going to get a giant move to the downside. It's probably move down into supports. So what we have here is the 78.6%. That's this distance right in here, as if it gave up 78.6. It's gotten here under this minor cycle right there. Once it got under there, it convinced us that what we're in is this corrective period here, and that yellow zone, that yellow area, saying this is that period of risk. And we have it labeled in here. If you're learning about cycle analysis, well, you see right over here where it just had a little correction. That's a strong right-hand translation there. You could see right over here a strong right-hand translation there. But what happened here is that the peak was on the left side of the cycle, and this is a weaker left-hand translation, confirmed by that break right there, and now moving into this corrective area. So here's your minor 100% fib extension right there. Here's the 138 right there, and here's the 161.8 here. These prices right over here are 3149, 3085. This is 3035. So you can see that 3035 number is coming up again right over there. And this down over here is under 3,029.70, which is this cycle low right there. So if the sell-off became extreme, that's where it would probably go down to. Once this is completed right in here, the question is, will this be completed here on the weekly? And let's go to the next cycle right over here. So this one right over here tells us, well, that ends on 7/8. So that's July 8th. Right now, you could see this is pointing out to the end of June. So there's a possibility in here that this goes out to, let me just move this here, right around that July 8th period, or that the cycle that it's in is actually going to make the low. So I'm just going to activate this, which would give you the low somewhere right around here. So either the cycle we're in is going to make that trough, or the one out here to July 8th, because I'm using the daily to give me this short-term information. Will this come down, have another rally, and then come down again into early July? That is a possibility. We don't know that yet. We're going to learn that from how these patterns act, how the momentum acts, how the cycle formations come. We learn all of that from this information. So that's what I'm giving you right now. The next week looks like it's going to move down, and then there would be some kind of a bounce in here. Depending on where the bounce goes, we'll get a sense for this next cycle out over here. So this low over here points to the end of May, the beginning of June. That would be this right over here. Let me just move this over one click, like right over there, or the next cycle out over here to the beginning of July. That's kind of a bigger look at how I'm doing this analysis, but I think it's very informative to look at it that way. Let's look at natural gas /NG and / natural gas. Now here we go. And you could see in here that there are, on the weekly chart, some very excellent harmonics that we see here also. So remember that our work is artistic. It is not science, though it's very mechanical, and we make it into a science and mechanical, but it's observational. That's how we get important information. When you get into this cycle downward movement in here where this corrective phase is and this very powerful cycle, it tells us the next rally is likely to make a new high. It did that. But then when you get into the minor cycle here, if that goes down and takes out the low, then the probabilities are, this is where it becomes probabilistic, is that the next rally will fail in resistance. That's this rising phase right here. And you could see it got up to resistance and turned down. This overall is a very negative occurrence. Now, sometimes you get these kinds of shapes and it repairs itself. How do we know when it does that? Well, let me just put up this right over here. And you can see this actually needed some updating from the chart that we put out for our members. So I'm just going to fix this, and then the update will come the beginning of the week for our members. There's a slight difference in here. So once it gets up over the 61.8, I'm going to start to be suspicious. But then if it gets up over here to the 78.6% level right over here, then it's going to warn me that it's repaired itself up to that level right over there. So I get a warning that it's better at 41.12. I'm really convinced that it's improved at around 447. You know, this is 412, this is 447. Unless it gets over those numbers, I'm going to believe that this is a very negative setup. So this is how we use the information. You can see the momentum is negative here. That's the weekly intermediate conditions that I'm looking at. When I look here at the daily, fantastic. I mean, this really is lined up really well. It said to me that this rally right over here in the minor cycle would fail. Notice we had it listed as a sell zone, working phenomenally well. And then it comes down here probably into the next week or so and make some kind of a trough. If you look here at the weekly here, it looks to me like the next rally after this trough will fail again after it starts to move up in here because it's overall negative. So I have my sell radar on when I'm looking at this. Notice here the upward momentum turned right over here and you got that rally, but that was fighting against downward momentum on the weekly, and that kept this from moving up. This is important because I'm going to show you this on the S&P 500 in a few minutes, and you're really going to learn a lot from looking at the analysis this way. So overall, my sell radar is on in natural gas, and it right now is getting to an area where the downside temporarily is likely going to be over with. And then we wait to see how the next rally looks in there in natural gas. And the last one we're going to look at is ZN / which is the 10-year. And here is the weekly on the 10-year. Now, notice the harmonics in here. They're really pretty. You'll see there is a dominant cycle right over here. And then there are minor thirds. Now the minor thirds are pretty long. Those are weekly 22 bar cycles. And look at the diamond that formed in here as this was making a peak. Diamonds can be neutral. I mean, you don't really know. They're a triangle, two triangles facing each other. And if they're really small and show up in the middle of a move, they're usually a consolidation. But when they're kind of bigger like this, they can be a top or a bottom, and you kind of have to wait. And you could see this really set the top in the minor cycle that you can see right over here. This is the kind of information that we get, and we got the breakdown right over here. So you can see the minor cycle right over here is pointing to an ideal trough right over here that comes somewhere around the third week or fourth week of June. Now, these vertical timelines that you see right over here, those are set up 3 bars either side of that. Katie does a fantastic job with our cycle low timing tracker, and she has this all listed when they're in certain areas, periods of risk, bottoming, confirmed that they're in sync one way or the other. So she does a great job on that. If you want to learn more about about that cycle low timing tracker, write to Katie or write to Matt on that. So this looks like it's going to go down again further. You can see that right there. If you look here at the daily chart, the same thing. You could see momentum in here as it came down. Look at here on the slim ribbon PO. This turned red right over here, and it's about to give you a down arrow that you see right over there, like you got right over here towards the end of that cycle there. So it says to me one more trip to the downside, likely coming in here. Again, let's go back to the weekly. There's your potential trip to the downside. This cycle right over here, the bigger one, ends July 22nd. That's the next harmonic family out there. Is that going to be in play on the downside? Well, July 22nd, if I were to duplicate this, and I'm just going to take it out over here, July 22nd is right here. So you can see it's possible that this weekly cycle is going to come out here into July, and the decline in here, the corrective period, is going to be the next whole harmonic family here. We don't really know about that. I just want to go to TNX because TNX is the inverse. This is the actual interest rate pattern in here. And if ZNN is looking negative, then TNX is going to look positive. And you see that. So you should be really doing your analysis on both of these. And you can see in here, TNX, we have pointing up in here to a yield of 4.6 up to about 4.8% in this rising phase, which is pretty early. This is confirming to me the negativity that I just showed you in the ZN, because I'm looking at TNX, which is the 10-year yield. And you can see why we do the cycle analysis on both. Look at the momentum upturn right over here. As the reversal scout tells you that you're in this rising phase, look over here where the slim ribbon and that really gives you, and the reversal scout turning up right over here, the slim ribbon PO about to give you an upside momentum signal that yields are going to go up again, meaning that the future is going to go down again. Highest probability. Remember, this is probabilistic, and that's what I'm showing you is the probabilistic analysis. And I hope that was extremely valuable. I can't help but do a lot of teaching when I'm doing this because I really want you to learn. And do go to our workshop page, and there's a ton of information about cycle analysis there. And you can watch a free video up at the top of the page at askSlim.com, and you'll get a ton of information. I'm going to turn this over to the team now so that they can bring you the rest of the analysis.
Okay, I am going to share my screen, and we should be able to see the monthly chart of XLY. Can we see that?
Not yet, Katie.
Yep.
Okay, yep.
There it
All
Okay,
good.
great. We had a member that requested this chart yesterday. So this is the monthly chart, and we've got cycles in here that are very consistent. I've got 33 bars. So this is looking like it could be an early low, and I've made a notation, but it hasn't been confirmed. There's still negative momentum. There's our reversal scout pointing down, and it is showing negative momentum. This ideal trough would come between June and January of next year. So that is quite a long period of time, and that's because each of these bars is 1 month. So either we're getting the trough now, or it's going to come out like in the November winter timeframe. And the reason that I can say that is because this would be the next weekly cycle. This is the weekly cycle brackets, and those are an average of 37 bars. And you can see that this current cycle has a weekly trough that is due out at the end of November, beginning of December. So if this were to get above the 78.6% fib, then that would raise the probability that I would think that this is an early low. So it's going to be important to watch how it reacts once it gets up there. We've already gotten through the upper resistance zone in this rising phase. And so the next level up will be this 78.6% fib at around 226. If I were going to trade this, I would be bullish cautiously up until this level, and then I would want to see how it reacts there. And that would be based on the momentum on these lower time frame charts, weekly, daily, 2-hour, etc. The next one that we're going to look at is Tesla. Let me get my chart. Okay, so we're in the rising phase, just several weeks off of this intermediate low here on the weekly chart. And we are projecting up to the top of the resistance zone, since just in these few weeks we've already gotten to the middle, or possibly up to the 78.6% fib at about 430. The reason that we're making these projections is because this cycle retraced all the way back down to the cycle low support. So as Slim was just talking about, probabilistically, we would not expect to be able to take out this recent high back here. So we have our projections to the levels below that, and we have a rising support zone. Over on the daily chart, this is that move up to the 50% fib from the weekly chart, as you can see, and we've tested that area a couple of times, positive momentum with both the reversal scout and the slim ribbon, but we are getting late in the cycle, so we would expect maybe a little bit higher, and then a relatively shallow retracement would be my expectation. If it gets way down here, then that would really throw the caution flag, but I don't think that's going to happen. This could set up a nice buying opportunity for the next move into the rising phase there. And just to equalize the workload on RV a little bit, I'll do Palantir. And so we are also in the rising phase here, just the same, about 4 or 5 weeks off of that intermediate trough. These are relatively short cycles, only 17 bars. So we've already tagged that 100% extension on positive momentum. So our next level that we are targeting is 145. That is the 127.2%. And if we switch over to the daily chart, you can see we formed that trough here. It was just a 1-day drop down to the top of the support zone and then back up. And here is 141.87. I'd expect to be able to get there. And then 145 was that extension level off of the weekly chart, with the next trough not due until the beginning of June. All right, RV, off to you.
All right, awesome, Katie. Great job. Let's go ahead and pop over to the semis. I'll share my screen here. We'll look at the SMH, weekly, daily, 2-hour time frame. So on the intermediate term, we had a trough that was due. It formed actually on time, really strong sell-off, and now we have moved all the way back to where we were back in the later part of February. And overall, this is really poised for higher. This old high is in play at 269.66 as we're still firmly in this intermediate term rising mode. Let's try that again. There you go. If we pop over to the, oops, let's see if I can get my cursor back. Okay, we pop over to the daily time frame. We are in a rising mode here as well, and would really just only be looking at sideways moves here, and then still higher in the SMH, and apologies, I think he's popping up, not sure why. We have a zone from right on 238 to 224. I'll be looking for that to hold on the downside and a move up towards that 258 area. If we jump over now to Apple in the near term, so this is a near-term look. So we'll first look at what's going on the daily time frame. And you can see this is actually getting very interesting. Bring over our cursor. A series of higher lows that are forming. My cursor is not working properly, so you just got to humor me here. It's kind of acting funny. We have that higher low that has formed and now the equal high. So this is really looking like this is going to move still meaningfully higher as it moves over that 214-ish area. We'd be looking for a move easily into this zone right around that 228 in Apple on the daily time frame. And let's pop over to the 2-hour. What we're seeing here on the 2-hour is still really bullish action, holding sideways, and this is looks really poised for higher here over the coming week or so in Apple. And I'm going to go ahead and hand this off to you, Slim.
All right, great work by the team. Absolutely. Let me just share my screen again and get back from mute. All right, so that was what we do every time we do this live event, and make sure you become a level 1 to 4 member and participate. You'll be able to then ask questions in here. All right, let's move on. This is Matt's review of our services, and he's got a great offer for you right now where you're going to see it all, see everything we do with a non-recurring membership. Pay once and you will not get auto billed again. Matt, take it over.
All right. Great work, team. Thanks, Slim. Okay. I'm going to share my screen. You should see the homepage of askSlim. So for those of you that aren't familiar with what we do, we are a professional technical analysis services and trade planning tools firm. And we have multiple membership levels. And I'm going to show you those levels very quickly here and also talk about the current offer that's available. So if you go over to our memberships page, you'll see that we have 4 different membership tiers. And then we also have a standalone day trader service. So as you go from level 1 to level 2 to level 3, level 4, essentially what you're getting is an expanded offering when it comes to the coverage, the depth of the coverage. So that means it will have additional symbols. So in level 1, we primarily focus on the indexes and then the ETFs. And there's a report that comes out every day, a technical analysis report on that, has all of our charts from the multiple time frames that we do. But then as you move into level 2, that's when we expand that coverage. You have then access to our complete trader library, and we have new videos, content, timely videos that come out on the indexes, on futures, on major markets. And then as you move into levels 3 and level 4, you start expanding into the tools that we offer. We have a momentum tracker. We have our market conditions monitor. We have a ranking system. All those tools are designed to help you with your trade planning process in terms of being more efficient, more effective. And then when you move into level 4, that's our top tier. As Slim mentioned, that's what the special is today, and I'm going to step quickly through that. And really what's most important about this offer, and when we say it's special, it really is. This offer itself, which is a trial. So it's 1 month, as Slim mentioned, it's $99, regular is $159. It's 37% off. We only do this once a year where we give a trial of level 4 where it's a non-recurring offer. And with this, you do get everything that is included in level 4. So that's going to be the complete suite of our custom charts and indicators. It's going to also be all of the proprietary grids that the analyst team here, the askSlim analyst team, has put together. And I want to show you an example of that. So all of the charts that the team showed today are the same types of charts that you would be able to import into your own platform. Now, it is required that you would have the Schwab account. We're not necessarily pitching Schwab. They have the thinkorswim platform, which is what we use to do our technical analysis. Through thinkorswim, they provide a piece of functionality that allows us to share the work that we do. I believe that it is available free from Schwab. And so it's not about are you going to trade with Schwab? Whether you do or you don't, that's totally up to you. But what is important is that you actually get to import the work that we do. You get to see the indicators. Not only do you see them, if you're level 4, you get to import them. And I can't stress how important that is. And I don't normally talk about giving guarantees at ever, because there are absolutely no certainties. But what I will guarantee you is that there have been thousands of hours of testing. There has been decades of work done to come up with this methodology. And then in particular, the indicators that we use to help us, most importantly, with directional bias. So that is I think the heart of our work, is that we have meticulously come up with ways to understand how to present directional bias and provide ways to have multiple time frame analysis to support that some of the evidence outlook in one direction or another. This is critically important if you're a swing trader. So if nothing else, if you are looking to expand your technical analysis horizons, if you're trying to find ways to enhance your edge in the area of bias, you're going to find that with askSlim. And we have these at multiple time frames. Now, there are people that say that, and I understand it, that momentum can be lagging. Well, it all depends on what time frame you're looking at. So I'm right here, if you can see my cursor, this is the 2-hour and this is the S&P. And these two indicators here, one that color codes the candles, which is made up of 3 exponential moving averages, the slim ribbon, and then also we have here the reversal scout. And you can see the both of them. This was on 5/8. They both turned positive again. This is coming off of a daily cycle low or a swing low, and then you have a high conviction of an impulse move, because we're looking at the directional component, and there's another impulse move likely moving up to the next key target areas. The point of this is that these momentum indicators in this time frame, there really was no lag here. And then in addition to that, we have indicators that help with resumption of dominant momentum conditions. So this is down here in this panel here. This is what we call the slim ribbon PO. And this one here is absolutely not a lagging indicator. So what it's doing is it's identifying the dominant momentum condition. It's sensing if there is a pullback in this case. And then when it reaches a level where it becomes slightly oversold, just enough so that it stays within the confines of the dominant momentum condition, it will then fire a continuation signal. And this is a confirmation, again, not a guarantee of what will happen, but a likelihood based on this specific type of algorithm. So if you're looking for things that do keep you on the right side of the momentum, the right side of the trend, the right side of the price pattern, that is what we have developed here. What happens after that is up to you, but you're going to have that with us. And if you are a near-term trader, we have meticulously, as I said before, defined the indicators in the grids. These are all available if you're a level 4 member. And we have a huge comprehensive resource area to help you import these. And I do live events to support that process. We have an excellent team here at askSlim on the support side of things, our customer experience team. So you have everything that you're going to need in terms of information and then support. And whether you're an active intraday trader or near-term trader or intermediate time frame trader, we have all those tools. The last thing I just want to show very quickly is the MCM. Now, the MCM, again, we're very focused on bias, and we're focused on when the next swing or the impulse is likely in motion. This is Central Standard Time. So at 10:15 today, there was a signal of very bullish condition in the SPY that went off in the MCM. Now we are an hour and 15 minutes. So I'm going to pull up my intraday grid. So I prepare an intraday grid every morning about 2 hours before the market opens. Okay, so this information I'm going to show you right now is not, I have not backdoored into this. This has not been created after the fact. This is happening presented to you or given to you before the market opens, and then you get to utilize it during the market. So I use a set of proprietary studies and a set of proprietary information to build this out. But what you see here are the most important aspect is going to be the momentum indicator, and then also the yellow acceleration zones that we call them. Okay. And then I'm going to come back here over to the SPY. So obviously how we color code this is you have on the downside over here support, on the upside is resistance, and then in the middle is like no man's land. But what's important, again, you came back to support. So we know that the 2 hour is positive. We come back over to my multiple time frame grid here. We can see that the 2 hours has been positive, right? So sort of that dominant energy momentum condition for intraday trader would be positive. So the next thing I want to know is another time frame lower. What's that condition? And you can see the reversal scout on the 15-minute, these are 15-minute charts, has been positive. We opened up strong. We pulled back here. I'm sorry, I'm going to go back over to the SPY. The Russell's been the strongest today. So we opened up a little choppy, higher, got choppy, came down to support. So as an intraday trader and a swing trader, you want to see how is it acting in support, how is it acting in resistance. It came down to support, and then it did what's supposed to do. Buyers came in. And then if you're looking for activation signals, right? When is there a signal to go? And if you want that based on momentum, there's no better, we believe, obviously, but we've put the time, the money into this. And you can see here again, it triggered at 10:15 a.m. Central Standard Time, very bullish, and then it gave you that impulse move. That's what we're after. There's an impulse move happening right now in the Russell. The Russell's into the acceleration zone. Are there any guarantees? No, but that's not the point. The point is to develop a logic that provides you with an edge of the likelihood of one thing happening over another. And that's what you're going to understand at the deepest depths. And also from a psychological standpoint, Slim has put decades of work into helping you understand the psychological aspects of being a trader. That's what drew me in as I hired him as my trading coach over 20 years ago. All right, Slim, that's what I wanted to share in terms of this amazing offer that we do once a year for $99, and you get everything in level 4.
Matt, that was one heck of a presentation. I mean, I loved what you showed there. Just great job.
Excellent. Appreciate it. It's all from the heart.
Yeah, I get that. I mean, really amazing, this level 4 special that we're having right now. So make sure you have any questions, write to Matt at askSlim.com, and he'll be able to answer those questions for you. All right, let's move on. Stock market analysis and projections. And we're going to look here at the S&P 500 and some other important things. First, I want you to read this slide. It talks about our approach to the markets and how you use our information. Was there something that one of the team said?
No, just making sure that your slide's up. It's there.
It's there. Okay, good. All right, I'm glad to hear that. And always trade ownership is an important aspect. No matter what we show you, no matter what we give you, this is all about trade ownership. Why is that so important? Because if you don't own the trade, then you're not going to manage the risk. You're going to wait for somebody else to tell you something about it. And trade ownership is one of the key aspects of being successful. It has to be your trade. It has to be you following your trading plan. And then all of a sudden, you're going to find out that the success rate is really going to change for you. All right, so what happened in the market this week? Well, there was a monstrous move on Monday. The indexes just had huge gains on that tariff deal with China. And the tariffs were cut by 125% on both sides. That means there's a 10% tariff on U.S. goods into China and a 30% tariff on Chinese goods into the U.S. That was certainly palatable to investors. And after the UK deal, there's an indication that there's going to be a lot of tariff deals coming. And so tariffs are no longer scary to investors. The stocks just follow through on the upside all week long. Today is the 5th up day of the week, all days on the upside. And the gains came despite a collapse in UNH on a criminal probe on Medicare fraud allegations. UNH down some 53% in 5 weeks. Wow, and that is a monstrous company, about 30% down in this last week, and that hurt the Dow, but the Dow was still up about 2.5% on the week. S&P 500, Nasdaq, and they're up somewhere over 5, close to 6%. Russell up a little bit less than there, so it's a big up week for the market on top of a market that was very strong. The sentiment went from investor terror over tariffs to ebullience over the growth prospects. Now, that's kind of an important comment in here because, I've said countless times, you've probably all heard me talk about the fact that the stock market valuations got insane and we got a big correction after that. And now they're getting up to insane levels again as the market is moved up. But we saw that the market was able to stay overvalued for a long period of time. And now with the growth prospects improved, the lower probability of a recession, the investors are looking past all of that and saying, well, the GDP will do better down the road and the earnings will be higher. And therefore, we can afford to buy these stocks at these levels, even though the S&P 500 is over 190% to GDP, which only happened twice others in history, and those brought very large declines. So the market is very overbought. I'm going to say that and say to you that our analysis says it's going to try to go higher, and we're going to respect what we see. And I'm going to show you that analysis right now as we look at the stock market. We're going to look at the S&P 500, NASDAQ, Russell, and the VIX, and of course our market condition monitor, which you just got a peek of on a much shorter term usage by Matt. And I'm going to show you a special use of the reversal scout in line with what Matt showed for the near term, evaluating what a day trader would do or a short-term swing trader. I'm going to show you something in a little bigger perspective that I think is very important to look at. So let's switch over to the charts right now. So I have interest rates up there. Let's just switch over to the S&P 500 market. Let's talk about first what my initial analysis was. You see this bracket on the bottom that is grayed out, or we call it ghosted. My original analysis was that the market, and if you go back and watch what my end of the year analysis was that it would peak in here and have a decline April, May, June. And you see that period of risk, April, May, June, and that I had anticipated that May or June would be the trough in here. I also anticipated worst case would be 5,100. But of course, we got into a panic. And when you get into panics on the downside, they reverse, and those reversals tend to make it harder to get back down to the low. So after that, I said that, well, this low over here may get tested. It may come down. It could make a lower low, but maybe it was going to make a higher bottom. And I showed 6 different occurrences in history where it made higher bottoms. And that is what I thought was the possibility. And I said this could very well be the low for the year at that point. Still, I was looking for a test of this low of some kind, which really did not come. It pulled back, but I'll show you that. So this is what happened, and that is the harmonics shortened. Now, some people say, Slim, you move the goalpost. Well, I don't move anything. The market tells us. And it told me the harmonics had minimally shortened. So I do that. Remember, this is artistic. And what we do is look at how that information gives us probabilistic information. And in this case, it said to me, well, the harmonics had shortened in this case. And so we put in the shorter cycle brackets to help us with our projections moving forward. You may care about what happened before. I care about what's coming. And that's what the analysis is about. Now, you can see in here that the reversal scout turned up. The reversal scout is normally not this much of a laggard, and it depends on what time frame you put it on. But when you get a bungee jump like you had in here, it takes a while for the reversal scout to turn up. Mostly it doesn't lag that much, and the information from it is very good. Reversal scout turned down over here. It kind of whipsawed you as it was making the complex M top that occurred in here, and then turned over right over here. And it had tremendous value at that point. When I go over to the daily chart here, This cycle right over here could have been in the bottoming process of the weekly cycle. But the reversal was so big in here, where the first few days was, some 600 and something points off the bottom, then it was not really possible for this to get down, and it formed this very powerful right-hand translation. In other words, this peak over here came way on the right side of the cycle and then came down and made this trough. If you look at the rhythms in here, you can see that these cycle troughs were actually quite good, and you can see the cycle rhythms and they are quite good. How do we use this information really? How do I, use this for trading? I'm going to show you another kind of a chart that I constructed. Now, at some point, we're going to have this as an indicator, and we don't have it right now. I kind of like to call it my trade radar. And that's what we're going to look at right here. So here's the same charts we looked at. Here's the weekly chart right over here, which shows you the reversal scout, which is available to you if you subscribe to level 4, which we have the special on right now. And I'm showing you where the reversal scout turns were. Now, one of the great aspects of the algorithms that we built is looking for alignments in momentum conditions in different time frames. That's why we look at multiple time frames, because of how important it is. So going back to the same kind of a chart without cycles on it on the daily chart, what I'm doing in here is comparing the two momentum conditions on the two charts. So as you can see, when the market was rising over here on this chart, and you got the upward momentum turn, that was right over here on the daily chart. So here's the reversal scout on the daily chart. When the momentum is strong and the positive, and the momentum is positive on the daily chart, the zone is colored green. And that tells you, well, you want to be on the long side of the market because the impulses are likely to be strongly on the upside. When there is a declining phase in here where the reversal scout is negative on the daily chart, and it aligns with a positive reversal scout here, it's yellow. It tells you, don't really look at the downside in here because this is likely a corrective phase in here. So here was a cycle that you can see and a cycle that you can see, but I don't have the cycles in here. I just want you to see using the momentum. Here's where momentum turned up on the daily chart. That was right over here on the weekly chart, telling you upside is the impulse area here. This is like our day trader, which essentially gives you the impulse monitor. It monitors 4 periods where the impulses are going to be in one direction or the other. You could see the same thing happened in here. Here, where you started to form the M top, where the momentum went negative right over there on the weekly, that's where momentum was negative here. But it turned here, but momentum was still positive on the weekly, so it's yellow. But right over here where momentum was negative on both, it's red, and you could see the impulse was on the downside. Perfect, beautiful. Here you could see the impulse on the upside again, because this is where this was green, and this is where this is green. And now look what happened. Look where the momentum turned negative right over here. So on the daily, you can see it actually turned sooner, but it's yellow there because the momentum was not negative yet on the daily. Here's where they were negative together, right here and right over here. Look what happened, the downside impulse. An upside move was yellow, and then another downside impulse here. This was that bungee jump. It fell like 900 points in 4 days here, and then moved back up 650 points. This is where I misread because, I still see this as negative and I still saw it on the cycle as negative, but this decline was so big that there was a lag in here, a bigger lag than we normally get, because the market was moving up while this was in a red zone because the bounce was so big because it was a panic sell. But look what happened here. Look at the upturn right there. Look at this upturn right here. Impulses should be on the long side, on the upside, and you can see absolutely beautiful. Look at how understanding momentum on multiple time frames can keep you on the right side of the market, whereas you will be long for the upside impulses, you will be short for the downside impulses mostly. So that's, it'll be wrong sometimes. You'll get caught on this, but most of the time, this is going to give you just absolutely great information. Now, of course, the rest of the team puts together different versions of this. RV does trade ideas, which is phenomenal, and he uses this and the cycle analysis and all of that together. And like Matt said, what we're trying to give you is the best directional decision making. And RV's, he keeps it up there. So about 70% of the right decisions on directional decisions. So that's the key. I wanted you to see that because it's so important. It explains so well how the momentum conditions in these markets has really been strong guidance. And this is the area right over here that was negative, that messed it up and messed me up on the cycles because of this the magnitude of the decline. But now we're back in gear, and the cycles are back in gear, and the momentum is back in gear. And what this points to is the likelihood of going up towards that all-time high again. So there are some resistances before that. You see, it got through that 78.6% repair level. That was a confirmation, though the move was so big at that point that it really doesn't have a lot of value. And where are we right now? Well, we're shooting up to these target zones right over here. This is the 61.8% fib extension of this cycle. This is the 78.6, and this is the 100%. So the target zone is up in the new high area. The all-time high, 61.4743. I had originally thought the all-time high for the year, would be 61.75. Let's see where that goes. In the meantime, the bottom of this zone is 62.60. If it can get through what is pretty important resistances right over here, and what would be a 200%, GDP valuation to GDP, which is really unbelievable if we get there again. But, if we put together the sum of the evidence here, the market is going to shoot for those all-time highs. That's really what the setup is right over here. And until it proves us differently, in other words, some kind of a failure, and right now would have to really be a failure to get under this cycle analysis at 55.76, that cycle low right there. It doesn't look like it's going to want to do that. And the background news certainly doesn't look like it's going to be negative. So the market is still moving to the upside. Slim ribbon right over here turned positive, and that is giving you that strong upside move. The slim ribbon PO here is positive, and momentum conditions all positive. The NASDAQ NDX is pretty much the same. You can see that right here. There's really no difference in here. It's pointing up to that high area right over there at 22,275. The all-time right over here, you see right there is 22,238 right there, 22,000. Oh, that's 4 ducks right there. 22222. Call that ducks. Back from the CBOE. So that's where it's probably pointing up to right there until it tells us differently again through that repair level there. Again, look at the weekly. The original harmonics are still in there, which were the ideal harmonics, and then the early trough that came that we then had to reanalyze what was going on. And that's really what makes us really good analysts, because we're flexible. There are so many analysts out there that are inflexible and stick to their analysis no matter what. And we certainly don't do that. We just let the markets and the charts and the information speak to us, and then we adapt. We are bull bear agnostic, and we just let the charts tell us what's there. The last one we'll look at here is the Russell RUT, and then we'll look at the VIX. Here you can see the Russell on the weekly and the Russell on the daily. Now, the Russell is actually the strongest one today, but it's still only getting up to this level here at the 50% retracement level. So the question is, are the small caps going to be able to catch up? I actually believe no. And I tell you why. I think there'll be more rally, and you can see we're pointing up over here to, near 2,200, 2190, 2,200. This over here is 2188 right there on the weekly chart. The reason I don't believe they're going to catch up, and why the broader indexes I think are going to be the powerhouses on the upside to continue this rally, is because of interest rates. And if you are only watching this clip on the stock market, go back and watch the full show where I do the analysis on the bond market. The bond market has trouble. Interest rates have a higher probability of going up. The Russell stocks are the zombie stocks. They're the highest borrowers relative to their company size. And if that's the case, higher interest rates hurt them. The investors are going to try to make a case for this catching up, but I don't think it's really going to. And I think it's at some point going to have a harder time. Let's take a look at the VIX, the VIX. And you will see here that what we're looking at on the weekly chart is that we're in a bottoming area right over here. Now, these little green circles right over there are the bottoming areas, and it takes some time to set these bottoms in here in the VIX on the weekly chart. So the stock market, there's a period of risk inverse to this potential rally in here in the VIX that comes out sometime in May, June. So the end of this month or sometime in June, there's likely going to be some kind of a corrective period, and the VIX will get a pop to the upside. If I look at the daily chart right over here, and DJV asked me, is it possible that there's a left-hand translation? Right now, I'm going to say that's low odds. And what I want to do is I want to look at that possibility, DJV, because I looked at that. And I wanted to show you the possibility. So if these are the cycle rhythms that you see right in there, if I say, well, there's a shortening going on based on what is happening in the stock market, then there's a possibility that what's happening is that this would be the low, there would be very little rally, and then the VIX market would be doing this. I'm going to tell you that I think it's low odds. However, based on everything we're seeing here, the slim ribbon PO, the slim ribbon, the reversal scout, all of that, I would say that it's worth looking at. So you brought up something important, DJV, and that's Danny. I know Danny from way back many years ago. That's an important question that you asked. And I'm going to keep my radar open for the possibility that that's the case. So I'm going to take this and I'm going to color this. This is what I do when one of my team or I see a possibility of some change in here. And now I have that cycle bracket in there to observe, and we'll see whether or not that's the case. If that's the case, that's in alignment with what we're talking about on the weekly, with this still taking some time and the stock market continuing to move up towards the highs. So Danny is a student of our work, and he had a good eye on this to look at that and say, well, this is a possibility based on what we're seeing there. So I want to look at that. Remember, this is art form. What is the information I'm getting in here? If this goes out another couple of days with implied volatilities low, then I think you spotted something, Danny, that's really important. So I wanted to bring that to you. And I think that was an important observation that you had. So that was a look at the VIX. Let's go back to the S&P 500 just so that we can look at that possibility of the VIX being in that extended cycle with a left-hand translation. That would align very much with what we have projected in here with the stock market continuing to go to the upside. Let's take a look quickly at our MCM. I'm going to bring
Slim.
Yep.
Slim, it's Matt. I had a question come in from a member, so I'd like to put your trader psychology hat on for a second, if you don't mind.
Sure,
'Cause I think it's a
sure.
really important question. If you go back to the impulse monitor you put together with the reversal scout, that grid that you did the demo on.
This one here?
Yes. So when you were talking about the panic low that formed, all the negativity that was surrounding the news at that time, and the possibility, right, of a retest of the low, and then the indicators shift. The impulse says it's on green. How they want to know, how do you get out of that those thoughts of it's got to come back down. The indicators are probably wrong this time. I don't trust it. And I'm going to stay I'm not going to get in the market, or I'm going to just stay bearish, even though the indicators are sort of screaming at you, which is what you're trying to tell people, is that we build this so it almost gets past that those thoughts that keep you stuck. So could you share some insight into that?
Well, there's a couple things. First of all, if the position is costing money beyond what our risk management tells us is allowed, then the position should be wiped out. I mean, that should be mechanical. If you can't do that, there are psychological aspects keeping you from wiping out the position. I can't tell you how many times I have been through that in my 51 years as a trader, where I have, had a position that wasn't working. My P&L was telling me that there was an issue, and I wasn't listening to it. And then all of a sudden, I got out of position because it was too painful to stay in it, versus listening to what actually the market was telling me. In the case of this, it depends on your perspective, what your trading style is, but Matt showed you using the 2-hour chart. So if the 2-hour chart goes positive and the daily chart goes positive, well, then at that point, you're looking at near-term or shorter-term trades, and that should be warning you that you have to be moving out of the positions. The analysis is changing. I have 2 criteria for my risk management. Number one, have I reached the max loss dollar-wise in a position? Number 2, does the analysis support the position? If it no longer does, and you're past the amount of money or near the amount of money that you allow yourself to lose on any trade, there is no reason to be in the position. You can't justify it. If you're justifying it because I've lost too much money, or I need to pay my bills, or I need to pay for the college education of my kids, or I can't make my car payment, then you're in trouble if you're doing that. So it's really very, very much about you understanding at a deep level what is driving your decisions. Are you mechanical? Are you listening to the market? It's talking to you, or are you stuck in this shadow place? And we have a video in our workshop called The Shadow, and learning about that. And I am almost done producing now one called The Money Shadow, which is a prequel to it. I've got all the slides done and I'm about to record it. So I think you're going to find that fascinating. And all of that is important. Is your shadow, or what we call a risk manager, who wants to protect you but is actually hurting you, driving your decisions, or are you doing it at an intellectual level? That's my best answer to this.
Excellent. Okay. Thank you. We'll make sure to record that and share it.
Yeah, absolutely great. Okay, so I want to get back to looking at the conditions of the MCM in here. And Matt showed it looking at a shorter term. I'm going to focus on he looked at the near term, which is right over here for shorter term traders. You could see that on the near term, they are all very bullish right over there, the 3-4 indexes that we have there. I'm going to switch it over to the short term here, and you can see bullish. Now, some of these on the slim ribbon on the weekly are still negative in there, and that's kind of giving it's preventing it from becoming very bullish, but it's still bullish, as you can see in here. And this changed from neutral to bullish some time ago. That was over a week ago when it did that. And that's important information. If you look here at the intermediate term, you can see they're all slightly bullish because there are still some negative readings that are in there, but still turned slightly bullish right over here on May 2nd. So with that kind of a lead time in here, you're going to want to listen to that important information, because these are the algorithms that have all of those momentum conditions built into it. It gives you great information. Let's just look at the short term in here on, let's say, the top 10 stocks that are very bullish. That you can see right here. Let's just take a look at that, because you'll be able to dial into that, as you can see. And there's your very bullish stocks right over there. That's like the top 10 right there. Which are the ones that are very bearish? Let's take a look here. And there are the ones that are very bearish. And interestingly, of course, AbbVie is in there because the healthcare stocks have been going down with pharmaceuticals. You can see Bristol Myers and Merck. Those are the ones that have been weighed down by this problem with United Healthcare, and also that President Trump is trying to push down the pharmaceutical prices that you could see in there. Corn is negative. We've been reporting that. Wendy's, Hecla Mining, of course, silver stocks are suffering from the pullback in here in the metals that are in there. Let's just go a little bit further down. You could see Humana, XLV, which is the healthcare stocks, United Healthcare, Johnson & Johnson, as this cues you in to the ones that are very bearish and the ones that you probably want to avoid buying when you get that kind of information like that. So I wanted to give you a peek of the MCM because it is such a valuable indicator, such a valuable service that we offer. Again, level 4, the reversal scalp that I showed you here on this multiple time frames and the importance of that. Level 4 indicator, the slim ribbon PO, level 4 indicator, the MCM. If you're a level 3 member, you actually get a version of this. Level 4 gets the full version, which is with the intraday in there. So do consider becoming a level 4 member. Remember, this is the special. Go to the top right, click on that special offer, save 37% on the website. This is everything you get. You're going to see all of this. You're going to get all of it. And you're going to be able to do it for $99 versus $159 for 1 month, non-recurring. And if you love what you see, you love what you use, Matt's going to send you another special to stay on with us. So it will be just absolutely a great opportunity to learn what this team knows. And you can see we know a lot. We know stuff. I love to say that. That's it for this show. Go to askSlim.com and look around our broad amount of education. And do we ever have some surprises for you coming up in the next weeks and months that you're going to absolutely love? Team, how did we do?
Well, that was a lot of fun. Great work, everyone.
Great job, everybody. Thank you all.
Yes, thank you.
Super work by everybody. And we'll see you in the next couple weeks.
Take care.